No one is selling their Bitcoin, at least according to exchange flows. As well, we're seeing a big warning coming out of Argentina. Really, any fiat holder needs to pay attention to this. We also see Ethereum supply side crisis going into overdrive. I break down these super fascinating numbers for you. We're also seeing deflation starting to set in certain economies with the backdrop of massive supplies and increase of the M2 money supply. So let's break down the magic of money and how it all connects to Bitcoin. So let's start off our conversation with a big warning coming out of Argentina. Someone posted this over on Twitter. This is a stack of Argentine pesos being used to pay for dinner. A stack of money. You see the green 500 peso note's worth about $1 on the black market. The red 1,000 note's worth about $2. Now 10 years ago, 5 pesos was equal to $1. 10 years later, 500 pesos carries the same value as $1. This has destroyed lives, destroyed savings, destroyed businesses, destroyed Argentina. It's lost 98% of its value in 10 years. It's crushing. All fiat money ends the same. Some just take less time to get there. Let this be a warning to everybody, everywhere. Meanwhile, Bitcoin is up thousands of percent during the same period. And to celebrate, of course, this disgusting destruction of the Argentine peso, the government of Argentina is getting down on their knees ready to fillet the IMF for yet another predatory loan. And one of the latest loans that Argentina received carried the provision that the government in Argentina needs to restrict citizen access to Bitcoin. The IMF, they hate Bitcoin. It drives them crazy. They can't control it. Bitcoin removes the IMF's power to destroy and rob economies like Argentina. This is why we Bitcoin, because screw the IMF. But runaway inflation, it's actually not a problem everywhere, which is pretty interesting. In fact, we're starting to see deflation actually picking up in some pretty interesting places as we see some really sharp corrections coming into the inflationary pressures that we've seen in major economies. Here are a few interesting charts that Raul Pal shared over on his Substack. So the Producer Price Index, or PPI, in China, down big time. The story is the same over in Spain, where we saw, again, a massive, dramatic, and very sharp decrease in the PPI. And look, there are lots of other similar charts in many economies. We're seeing some pretty dramatic stuff happening right now with the inflationary pressures. And although this next chart, though, could be the most telling of all, this is the Supply Chain Pressure Index. It is basically completely reset. The supply chain crisis, according to this chart, is over, which is crazy. It's been such a big story for such a long time. This next chart here, though, could really be the nail in the coffin for inflation. See, it shows fertilizer prices in the USA. Those have almost completely reset now, which means food prices will come down. So many of the core reasons why inflation exploded have come down. The likelihood that we see inflation fall even more is increasing. In fact, we're already starting to see deflationary pressures coming into play for the price of some goods and services. And the more money, of course, that people end up having in their hands, because they don't lose it all to inflation, the more money they have to ape into shitcoins and pumper bags. Yes, it's just science, guys. Don't fight it. And speaking of money science, serious stuff here, this chart shows the M2 money supply of the world's leading economies. Now the blue here, that is the US of A, which is currently going down, so they're decreasing their money supply. Green is the EU, also going down. Orange is Japan, going up slowly, not dramatically, but continuing to go up, continuing to increase the money supply. And red is China, basically ducking, exploding right now, leading the entire world higher in terms of M2 money supply and bringing liquidity into global markets in a massive way. They're pumping so much money into markets that it's actually outpacing the cuts in the EU and in the USA. And it is becoming increasingly likely that the USA, of course, is going to need to open up those money printing floodgates sooner than later, right? And that could be the last straw to break the market camel's back, essentially. By the way, here is a chart of the Federal Reserve's balance sheet. You can see, of course, we had a dramatic spike upwards. I mean, we were on a bit of a downward trend for a while as they were trying to tighten things up. But then, of course, they had to make a response to the banking crisis, which was to basically roll out infinite QE to solve all banking problems. And there'll be more money printing. There'll be more. And before we talk about the insane Ethereum news and some critical Bitcoin charts you need to see, if you are a trader, then now is the time to get yourself an account over on BYBIT. They have the best futures markets, hot altcoin markets, popular copy trading services, and as an exclusive bonus for using that link down below to get signed up, you're gonna get up to $30,000 in deposit bonuses. And as a special limited time offer, you can actually claim a free, yes, a free $1,000 BTC USD trading position. And again, use that link down below to start your account. Now let's talk about Ethereum. Have you heard about Ethereum's recent burning craze? It's been pretty crazy. You see, the meme coin season on Ethereum has accelerated the burn rate dramatically. Right now, we're reducing the supply by 1.5% annually. That's averaged out over the last 30 days, but that's not even the wildest part of this whole situation. You see, since the transition over to proof of stake, Ethereum has burned a whopping 229,000 Ethereum coins. That's crazy, man. And get this, 142,000 of those coins have burnt in just the last 30 days during this bearish market that we've been in, right? Pretty impressive, isn't it? The question is, what happens when bull run mania comes back? If we're able to do this within the current market conditions, crazy. Will we see an even greater acceleration in the burning rate? Ancient astronaut theorists say yes. Something definitely to keep an eye on, but that's not the only mind-boggling statistic here. Right now, there's an insane multi-week wait just to be able to stake Ethereum, and yet almost no one is trying to exit. Currently, there's 48,887 validators representing about 7.79% of all staked Ethereum queued, waiting to get into staking, right? And that's 32 ETH per validator. There's only 1,136 validators out of a total of 623,434 waiting to exit. These numbers are absolutely astonishing. The level of bullishness being shown by investors towards Ethereum is off the freaking charts, man. There are now more than 19 million ETH that are staked. There's only about 18 million on exchanges. A supply side crisis is brewing. Money just keeps going into the staking contract and none of it's coming out. Let me know your opinion. Is that bullish for Ethereum or not? Personally, I think it is. Now let's talk about some Bitcoin charts. And this first chart here shows the number of Bitcoin being deposited to exchanges. Now this just reached a 3-year low. Let me just translate this chart for you. No one's selling. No one's selling right now. No one's interested in offloading their coins at these prices. They're not sending it to exchanges to be sold. They're just holding them. Macro backdrop, everything that's going on, people are holding on to their coins. Meanwhile, the total number of Bitcoin addresses holding one coin or more hitting 1 million addresses. Probably around the time that you are seeing this video will have hit 1 million. We're just a couple hundred off the time they're recorded. So the amount of BTC going to exchanges is currently at a 3-year low. The number of addresses holding 1 Bitcoin or more is at an all-time high. We can also factor in, we've got the Bitcoin halving in less than a year when we're going to see miners' supply cut in half. We're also factoring in all the other stuff, everyone who wants to get a piece of that pie from BlackRock to Dubai and beyond, right? Now look, I'm not a math doctor, but I'm pretty sure that all that means number will go up long term. Anyway, don't get too caught up in that day-to-day noise, which we're going to talk about now. Let's talk about some day-to-day noise. Bitcoin at the time of recording has bounced off of a major area of price support after a pretty volatile weekend got us back down to the $25,000 range. So all that fun and excitement that we had, but Bitcoin still just basically stuck in its range that it's been stuck in for about 2 months now. Now, what we don't want to see is for Bitcoin to start putting in daily candle closes under the red box. So this all kind of feels a bit reminiscent actually of the price action from like early January leading into February. We had that strong initial breakout and then we just ranged sideways for like 2 months. And then of course we had a bit of a crash down, washed out all the longs, got everybody super pessimistic again, and then blammo, next big leg up. Not saying that's exactly how it plays out this time, but you know, certainly some food for thought when looking at the charts, right? Also, this chart right here from Stock Money Lizards, it shows the price of Bitcoin lined up with the Wyckoff accumulation pattern. Now, if the lizard is right, then we are now waiting to break the resistance and move into phase E. Phase E, of course, being the big markup in price period. Maybe this helps us get to our 48K price target for the year. Time will tell if that idea ends up being not right or not. Okay, that's it. Subscribe now. I'll see you next time.